All right, chat. Everybody was saying yesterday's price action was bad, but I thought it was beautiful price action yesterday. And I'm gonna show you how we used ICC plus fair value gaps to make money trading yesterday's trade. Okay, so pretty much you come into the market, it's 7:15. So let's go to the hour chart. Remember, we mark up on the hour. Let's do it how we do it. So I'm looking at the hour chart and I'm seeing, okay, this is what I'm looking at, right? I'm seeing we broke these highs. Mind you, we're at all-time highs, but who cares about all-time highs? Market structure is going to move how market structure is going to move, okay? So I'm looking at this, boom, we've broken this high. Remember ICC, remember we use ICC plus fair value gap. So what are we looking for first? Pretty much, is this right here higher than, whoops, fuck, sorry. Than this right here? Yes. Is this higher than this? Yes. So right here is our what? Indication. So boom, we have our indication right here, right? This is our indication. So with our indicate, so now what we want to see is pretty much we want to see price come back under this level and then come back up. So that's what we're going to wait for. Now I also want you to remember, we use fair value gaps. I don't care if it's on the hour, the 15, or the 5. We use fair value gaps on one of these three time frames. We mark out fair value. So if you mark it, so I want you to peep this fair value gap right here, right? This hourly fair value gap. And I want you to remember this, y'all. I know this is the basic, but remember how the market moves. Remember how the market moves, right? Just remember how the market moves. Okay. So this is the trade you would have took yesterday. So boom, market opens up 7 o'clock. Let's drop down to the 15-minute. Now also, I want you to peep on the 15-minute. Remember, this is our hourly candle. Let's add text. 1 hour fair value gap. That's our 1 hour fair value gap, right? And then right here, remember, look at all these. We have a 15-minute gap right here. We have a 15-minute gap right here. We have a 15-minute gap right here, right? We have hella 15-minute gaps. So in that hourly fair value gap, it's hella 15-minute gaps that haven't been filled yet, okay? So boom, we come up here. We've already made this high up here. Cool, whatever, okay? Now we come down. Oh, let me get rid of this. I'm sorry. Let me get rid of that. So now I want you to peep this. I want you to peep this right here. I want you to peep this right here. Now usually I like this. I do like a close below, then we come above. But I want you to peep why I took this trade. So we took this trade because this right here is a fair value gap. That's a fair value gap. And if you go back to the hour chart and look, remember how we said, how does price move, chat? How does price move, chat? Price moves like this, right? Let's not make this hard. Price moves like this, right? Chat, what are we doing right here? Let's look on the hourly chart. How is price moving, chat? 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 So yes, so I entered off this. So I seen this, and I'm like, oh, cool. And not only did I see this, but let's get rid of this hourly fair value gap right here, right? Let's get rid of this hourly fair value gap right here, right? Let's get rid of this hourly fair value gap. Look right here. Look right here. Hella fair value gaps. Okay? Hella fair value gaps, right? Hella fair value gaps, right? Hella. And then if you didn't get an entry right here, remember the market always has to rebalance, yo. The market always has to rebalance. So you could enter off this. Boom. All right, we put in. Let's say you didn't want to enter off this 1 hour fair value gap where we cross back above this line, right? You could have entered off this rebalance right here. A buy, be going in 3 cons, stop loss right here. You can put your stop loss right here. Nah, that's 400. We ain't going down there. Put your stop loss right here, a 156, and then we aiming for these highs up here. That's like a 1,000-point move. Watch. Easy money. Easy money yesterday. It was easy money yesterday. Easy money yesterday. Easy money yesterday. All for what? ICC plus fair value gaps. Now let's go back. Let's make it clear and simple. We came into the market. Was this higher than this? Yes. What are we waiting for? We're waiting for us to come up under this line and then go back above. Why would we take a trade right under here? Because right here is a fair value gap. What happens is, what is a fair value gap? A fair value gap is the market rebalancing itself. How does the market move? Like this. So every time the market is doing this right here, this is the rebalance. So up, rebalance, up, rebalance. And that's what the market is doing right here. Look. If y'all look at the lines. Up, rebalance, up, rebalance, up, rebalance, up, rebalance, up, rebalance, up. That's how the market moves. Remember, if you're confused with the candles, use a line chart so you can see it better. Look at the candles, bro. Look at the candles. Up, rebalance, up, rebalance, up, rebalance, up, and then, like I said, rebalance. Like that's all the market is doing. So boom, back to what we was doing. So we have our indication right here. Okay, we have our indication right here. Our correction is right here. How do we know that our correction is over? How do we know the correction is over? So say you got scared, you came down here, it's correcting, right? It's correcting. How do you know the correction is over? The correction is over once we start making higher highs. So boom, right here we're making lower lows, low lows. Oh, higher high, higher high. You could have entered off this right here and put your stop losses somewhere around this area right here if you really wanted to. Quite honestly, like look. Let's go on the line chart. Look, you're making lower lows, lower lows, lower lows. Then what? Now we're making higher highs, and then we broke this high. That's an entry. That's an entry. That's how you know the correction's over. And look. The hour. And if you don't believe in fair value gaps, look, we tapped into this hourly fair value gap, and we never came back to this level right here. You could have put your stops right here, and you would have been safe as hell. And I want you to show you this too. Remember those 15-minute fair value gaps we were talking about? Here, let's get rid of this hour fair value gap so I can show you all the 15-minute fair value gaps that was created. So this is a big 15-minute fair value gap. This right here is a 15-minute fair value gap. And this right here is a 15-minute fair value gap. All these gaps were tapped into, right? This 15-minute, this 15-minute, and this 15-minute. But look at these. None of these gaps got disrespected. None of these gaps got inverted. Understand? None of these gaps got inverted. Look at this. Each time we wicked into it, but we never closed outside of it and made it an inverted fair value gap. So it was so not only do you have the hour confluence, yesterday, you have the indication, you have your correction, you have the hour confluence tapping back into an hour fair value gap. Then you could go down to the 15-minute chart, see we keep tapping into these fair value gaps, never break, and then this tap into this fair value gap before the market started to change. We never come back below this low. We never come back below this low. And then if you go in the 5-minute and you just look at structure, remember, how does the market move? How does the market move, chat? The market moves like what? This, right? How do you know the correction is over? Because the market is moving like this, chat. We're not making lows. We're making highs now. We're making highs. And if you go on the 1 minute, if you go on like a 1 minute chart and you really want to like see it a little better, look at how it moves, bro. Once you remember the small, I don't suggest the smaller charts always tell a story, but if you really want to see stuff better, just remember the market tells a story. So boom, boom, look, it starts right here. This is where it starts at. Remember, that's how the market moves, bro. That's how the market moves. It just moves up and down, up and down, up and down. That's how it moves, bro. That's how it moves. That was the play yesterday. So y'all, I don't care that we're all-time highs, bro. Market structure is still market structure. And the market structure is always going to follow. It has to. It has to, man. So yeah, that was the play you could have took yesterday. You could have took it off this low, off of this 15-minute right here when we retraced. You could took it off this one right here, this 5-minute when we retraced, or this retrace back up here. You could have took it off this too. Either of those you could have taken a trade off of. So that was the play yesterday. Like I said, yesterday was $1,000 day. So that's the play you could have took. But peace. Good news. The 101s are up. Links in bio. So if y'all want to book one, go ahead, do that. And y'all, if y'all got questions, charts, anything, you feel me? Psychology. If you just getting discouraged, I don't care. We talking. Feel me? That link in bio. So if y'all want to go book that. But peace, love, and let's get to it, man. Let's have a good week. Back test journal. Figure out where you went wrong and where we went right. All right? Peace.